Everyone, welcome to our 2 Cents. I'm your host, Clinton Smith. I'm also the CEO of GCES, and I'm here today with our financial advisor, President Galen Bargerstock. Galen, how are you today?
Doing great today, Clint. How are you?
Doing good?
I'm doing good.
Yeah. I feel like that's what you always tell me.
It's always a good day.
Yeah, that's good.
Even if it's not.
Yeah. I mean, we're here. This is our 22nd episode, and we're going to be talking today about the skinny on life insurance and annuities.
Yeah. I like life insurance. You know, it's kind of how I started in the business. I learned life insurance before anything else.
Yeah. And that's honestly where we started, guys. And we learned through the years that you need to sell more than just life insurance.
Yeah.
I remember whenever we went on a trip in the very beginning, and I'm going to bring it up again. I think I have actually brought it up before, but it's where we learned in the business that there aren't a lot of people, not everyone is out to do the right thing for their clients.
No.
Do you remember what I'm talking about?
Probably Peaches again, but yeah.
So to protect her name, we're going to call her Peaches. But we were at this seminar training thing that was all about life insurance, and we were sitting down at breakfast one day, and Peaches we'll say is her name, basically sat down and told us that on Sunday morning she likes to come into her office at her house, and she would basically just sit there and call through her list of clients until she made $1,000 in selling them life insurance. Whether or not the life insurance was the right choice for them,
correct.
Not even checking and seeing if they had other coverage and stuff like that. And that's when we learned that that's not what we wanted to be like.
Yeah, I did not want to be like that at all. Life insurance, I knew right away whenever I started doing it that there was a big need. First and foremost, I mean, everybody passes away. You cannot get out of that. It's just part of nature. So the appropriate life insurance is definitely going to be what you need to have in order to accomplish how you want to pass on. But yeah, Peaches was way off on how she did things. I don't want to bash her because she probably did protect a lot of people and do the right thing, but there's no one policy for every single person time and time again. So you have to get a little variety in there.
And when we started out, we worked primarily with federal employees.
Yeah.
FEGLI replacements was something that we did a lot. FEGLI stands for Federal Employees Group Life Insurance. It's a really good policy. It's a really good coverage when you're younger because it's super cheap and you can get a lot of coverage. But that is not the case. It doubles in price at 50. It doubles again at price at 55. Doubles again at price at 60 as well.
Yeah, pretty much every 5 years it's going to double in price. Great value. Not going to bash it at all. It is appropriate for whenever you're younger. It's going to be usually cheaper than you buying your own term policy, but the downside is, you know, when you're in a group policy, yes, you have that coverage. You're covered in that group. It is going to go up because you're paying for everybody's health conditions in that entire group, like the federal employees, like the FEGLI. But owning a term policy, you can at least have that and lock it in maybe for a 30-year term and have options on that to convert that into a permanent policy later on and save your health. You know, so there's so much to do with life insurance, and the younger you are when you go in, usually the healthier you are, and you're going to get the better rate.
Yeah. So that was actually the first thing on my list to talk about. We haven't even gotten to the first thing yet, but group and term policies. So Federal Employees Group Life Insurance, it is a group policy. So just explain that. What does that mean?
A group policy it's any employer. You know, FEGLI is the Federal Employees Group Life Insurance Plan, but there's also, you know, VGLI, Veterans Group Life Insurance, you know, or if you work at a hospital, there's probably a life insurance plan that they're going to have for their employees. It's just a package that doesn't really care about health conditions. You're going to get that coverage because you're employed there, and the price is, it's not a bad price, but you have to watch it because a lot of them go up very high as you age, and you just have to make sure that, you know, it's appropriate coverage, because a lot of people think that they set it up at the beginning and they have great coverage. They don't know the underlying how the policy works.
It's crazy how many people don't actually look at their paycheck. I'm going to tell another story too.
Okay.
So this is another from the beginning, from the past, from the old days, like 10, 12 years ago. We started doing seminars and we were meeting with federal employees at a Haas's. And federal employees really like Haas's. I don't know why. I don't even know if people know what Haas's is everywhere, but
not everywhere, but probably in our viewing area for sure.
So we were at a Haas's actually in Somerset, and there was a federal employee, a postal employee. He was sitting in the back of the room. The entire time, he did not care anything about what we were talking about. He was there with his retirement book. At that time, I think we called it a blue book.
Blue book, yeah.
And he literally just wanted us to fill out his retirement book. Do you remember this guy?
Yeah.
I can't think of a good name to make up for him right now, so we'll call him John. So John, he sat there and, you know, as a federal employee, you get a paycheck every 2 weeks whenever they get paid. And on that paycheck, it listed their insurance deduction. Do you remember what he was paying?
It was probably like $200-300 bi-weekly,
yeah,
not monthly.
So he was paying $200-300 a month for his Fegley Group term life insurance, which he wanted to retire. It doesn't carry through into retirement. And because we know that the price goes up every 2 years, I did the math back then. I remember it was $16,000 and some change that he spent throughout those entire last 2 years, $16,000 each year on life insurance that, one, he didn't know that he had, two, he didn't even want it.
No, he didn't.
And all of that money he could have put into his retirement instead of giving it to the group life insurance that he didn't know he had, and he didn't even know what coverage he had, and he didn't want to keep it anyways.
He didn't want to keep it. And, you know, a lot of people don't even understand what the deductions are on their paycheck, and maybe they're embarrassed to ask, and that might be the reason why. But, you know, you're talking about something from the way in the past. You know, since then, the calculation is actually on our computer, so I can give you the exact dollar amount of what you're going to pay by the time you reach age 65 or 67. And I also had it happen 2 weeks ago where another person was caught off guard and they were 65 and they were still paying that much money because they didn't know. Yeah. You know, and that's part of, you know, I guess the passion that I got inside of this whole, you know, retirement thing was, you know, explaining to everybody what they actually have and reappropriating it to retirement funds instead of paying the life insurance company more money than they need.
Yeah. And that was, I mean, that was the time that we started figuring out this business, and we learned that we needed to do more than just sell life insurance for our clients. That's how we ended up adding securities. We added other licenses and things for you to be able to be well-rounded and able to do everything that our clients need. So if you want to have a financial review, it's super easy. There's a number right here on the screen, 888-391-3465. I actually have that memorized now. So It only took 22 episodes and me saying it like 50 times for me to memorize it, but we are finally there, everyone.
Good.
That's exciting. So, guys, we're going to continue talking about the skinny on life insurance and annuities. We'll be back in just a moment. We'll see you soon.
I think the best thing to start at with retirement is just knowing that you don't have to have a certain dollar amount for retirement. It's just knowing that you want to retire and you need to start thinking about the different aspects of it.
You know, even if you're in your 30s and you just got married, it's time to start meeting with someone and get a plan in place. It's not always easy to do it whenever you're right there at retirement. So if you're years out, it's time to get a plan in place.
I think a successful retirement is a happy retirement. It doesn't matter to me how much money you're going to make into retirement. You know your bills better than I do. So I think just being happy and comfortable with what you have is the appropriate amount that you need for retirement. It's very important to have a financial plan into retirement because if you don't have a plan, you're going to kind of be lost with what to do. And plans change, but at least if you establish a plan, you have a little bit more consistency of what's going to go on.
As people, we strive for better, from a better house to a better career to a better life for our kids. But when it comes to your retirement, what does better mean to you? Does that mean more income, a flexible lifestyle, or better solutions? A better retirement begins with a plan. To get your complimentary financial analysis, call the number you see here. Your retirement isn't going to plan itself, and this is your opportunity to plan better. Welcome back from the break, everyone. We are today talking about the skinny on life insurance and annuities. This is our 2 cents, and I'm here with Galen Bargerstock, our financial advisor, and also the president of GCS. So Galen, I know we've gotten through like one checklist on our thing of things to talk about with life insurance. So we just talked about group and term policies, specifically federal employees group life insurance too. But I want to talk about some policies and things that people might not understand are actually inside of life insurance.
Okay.
So let's talk about return of premium.
Return to premium, it's just as it sounds. They're going to return your premium if you get to the end of the contract. So, same thing, like you can have a term policy for 20 years, and at that 20 years, if you did not pass away, they will return your premium back to you, everything that you paid. So, you don't have to pay for life insurance. You might have to prepay, but you can get money back. Yeah. The thing with those policies they are a little bit more expensive monthly or annually, however you plan on paying them, but you are going to get that money back. So it's kind of designed for people that are like, I don't want to pay for life insurance, I don't need it, because you will get that cash back.
Yeah, assuming that you don't come to your final demise.
Correct, and if you do pass away, then it's going to pay out tax-free to the beneficiary the face amount of the policy, the larger dollar amount. So, it's protection either way.
Me personally, I am the kind of person that I've said this many times, I would probably survive a plane crash. I don't know why I think I would survive a plane crash. So to me, return of premium life insurance policy seems like a good thing, because to me, if I'm going to survive a plane crash, I'm pretty sure I will survive another 20 years. And to me, to get all of that money back, I think is a good option that a lot of people don't even know exists.
Probably a lot of people don't know it exists. And, what I would tell people is, think about it's more of an affordability thing, because the premium is going to be higher. So if you're doing a proper budget, you might not be able to afford something like that, because you might need $500,000. And if you did a return of premium, you might only get $200,000 of term. Yeah. So it's a trade-off.
And the cool thing about everything that we're talking about, guys, is we can do this all for you at your house. You just have to call the number on the screen to schedule an appointment. It's 888-391-3465, and we will come out and sit down with you at your house. You can meet with us on Zoom, or you can come to our office in Indiana, Pennsylvania. But if you're watching this TV show, we work in your area. We drive there all the time. So all you have to do is call, and we will fit you in the schedule, and we can go over all of these things with you, because life insurance is not easy. No. There are a lot of different types of life insurances. There are a lot of different things that you can put into life insurance. And there are so many things in life insurance that we couldn't even wrap it up in a 30-minute episode for you. It makes a lot more sense that you actually call into us and schedule an appointment.
Life insurance, everybody's usually confused on what they have. So, one of the things that I will go over with a person is first exploring what their employer is giving them. And then, things like credit unions are giving life insurance policies now, so you can get life insurance from groups like that, or fraternal orders, things like that. So, life insurance, get that box of everything that you think you have, and then we'll go through that and see if it's appropriate. And if it's none of it's appropriate, then we scratch all of that and start with something new, because now you have the understanding of what's going on. So let's get that plan in place.
Yeah. There are two other types of things that we want to talk about, is guaranteed issue life insurance versus going through underwriting. Yeah. There are a lot of policies out there that have a guaranteed issue process, where all you have to do is fill out the application. At the end of the application process, you get in. You're in, you make the payments, you're in. There's nothing that no hoops to jump through, no nurses to meet with. And that is a good option for a lot of people who aren't exactly that healthy.
Yeah, I was kind of shocked, whenever I started doing this, to find out how unhealthy, America is in general when it comes to life insurance, because a lot of times people will get rated for life insurance policies, even if they are going through, where the guarantee, you don't have to see a nurse. But theoretically, Clint, what the idea is if you do go through underwriting, you are going to most likely get the cheapest possible based on your health condition, so it's going to work out a little bit better for you, price-wise.
Yeah. If you do decide to give a call to the number on the screen and work with us, we do actually go through this with you whenever we sit down with you to help figure out what the best option is for you for life insurance. We're not selling just one specific company. We look at a bunch of different companies to figure out what the best fit is for our clients. So if you're interested in life insurance, give us a call. We can help you figure it out and go over all of the things that are available to you. Let's talk about some benefits of life insurance that people might not actually know about.
Yeah. Like, you mean for investments, something like that?
Yeah.
So, you can have an IUL or a VUL. IUL would be an index universal life policy. VUL would be a variable universal life policy, where there is a sub-account that is creating wealth inside of it on top of the life insurance. And when you can take payments out that to fund your retirement later on in life. And I don't want to get too super involved, in this setting, because it's not appropriate for everybody. But it can give you an income stream in retirement if you properly fund a life insurance policy.
Yeah.
And IUL or VUL, I do like both vessels. It's just the risk is in the VUL. Anything variable, there's risk involved. And IUL has more of a protection where you're not going to lose principal inside of it, so it is a little bit safer. So, with risk comes reward. So the VUL is going to produce a little bit higher of, returns, hopefully, than an IUL.
Yeah. So just to make it super simple, it's basically a life insurance policy that has an investment part inside of it.
Correct.
And are there different options on what you can do with that money on the inside?
Yeah. I mean, nobody can tell you what to do with your money. So, you're just looking to essentially build as much wealth inside of it as you can while you're working or while you have the policy, and then take from that policy whenever you need it.
So there are some stages where we recommend that everyone checks in for life insurance and does a life insurance checkup. Roughly about every 3 to 5 years is a good time to do it. Yeah. But also too, there are qualifying events in life that you want to really take a look at your life insurance, such as having kids.
Yeah.
A lot of people have kids, they never think to either check in on their life insurance, but you have kids now, you probably either need life insurance if you don't have it, or you need to get more to make sure your family is covered. The other one would be getting married.
Yeah. Getting married, because now you have a family. Both scenarios you're giving me, either one of those, you're adding to your household, and if something happened to you, what's going to happen to them if you aren't there? So you need to have your insurance in check. And a lot of times if you have a new child that is being born and you're taking out a policy on yourself, you can also put a rider on the policy for the child. God forbid something happens, but you need the protection there as well.
Yeah. And one thing I will mention is that it goes by age.
Yeah.
The prices that you pay on life insurance all go by age. So it might not always be the best decision to purchase a new policy whenever you could just make adjustments to your old policy.
Correct.
And I'm even saying that you don't have to make changes every 5 years, but if you get married, you might want to put your new spouse down as your beneficiary. Mm-hmm. And even furthermore, if you get divorced, you probably want to take that ex-spouse off of that life insurance policy as well. So there are differences here in that, but also one of the biggest things, because we're going to go to break in just a minute, one of the biggest things that we like to make sure people understand about life insurance is that whatever you pass on, all of that money in that life insurance policy goes on to whoever your beneficiary is, tax-free. So they don't have to pay taxes on it.
No.
If you had $100,000 in the bank, and that passes on to your children, or whoever your beneficiary is, they ended up paying taxes on that. Life insurance, they get a check for the full amount, no taxes are taken out, they don't have to pay taxes on it.
Yeah.
And they don't even have to pay on the income that they get. There's no skimming off the top for Uncle Sam on life insurance. So again, if anyone's interested in talking about these subjects with us or meeting with Galen or one of our other financial advisors, just give us a call. The number's on the screen, 888-391-3465. You can literally book your appointment before we come back from this break. See you in a minute. When we started the business, we didn't know what it was going to come into. We answered a Craigslist ad, and Galen had already had experience in the insurance industry. And we just started working with federal employees.
Inside of our office, we have about 5 support staff that, answer phone calls, questions, paperwork, things like that.
I think clients enjoy working with us because we make it a very easy approach for them, where they might not understand why we're asking some of the questions we ask, but in the end, we put it all together in a 56-page customized report for them that we do for free, where it's a free financial analysis for them to understand everything that they have.
I think clients appreciate the most that we're more down to earth than some other firms, but we have fun while we do it.
At GCS, we have years of experience in working with thousands of families in over 40 states across the country.
We understand the ins and outs of your retirement planning and can help you understand all the options available to you.
Finances, retirement, the future, these are all things that can seem outside of your control, but with proper planning and a partnership with a financial advisor, you can put all of your worries at ease.
I'm Galen Bargerstock, and I've dedicated my life to helping families understand their retirement options and making sure that they can make the most of it, regardless of their income. All families deserve a financial advisor they can trust to help make the best choices.
At GCES, we have the expertise to help you down the road to retirement. All you have to do, give us a call today and start your journey. Welcome back, everyone. I'm Clinton Smith. I'm the CEO of GCES. I'm here with our financial advisor and president, Galen Bargerstock. Galen, still doing good, I'm assuming?
Still doing good, yeah.
I almost didn't get that out. I had a moment there. So, guys, we were going to say that we were going to talk about the skinny on life insurance and annuities, but it looks like we're only going to be able to talk about life insurance today. So look forward to a future episode all about annuities. So one of the things that I know that we talk about, let's just explain what survivor benefits are first.
Yeah.
So what are survivor benefits? Who does that apply to?
So survivor benefits are usually on a pension plan. You have a pension from your employer. They're giving you, let's just say for a number, $2,000 a month of income. That is your pension. If you pass away, they want to give your spouse half, usually. You can have some employers will do 100%, most of 25 or 50%, but you have to pay for that. So it isn't a free feature. And some people get confused because they're like, yes, I have to have that. If my spouse passes away, they need to have some kind of income. But the reality is, if most cases, if you have a $2,000 a month pension, and you're giving...
Hold on, let's break So it's $2,000 a month that they would make every month.
Every month for the rest of their life, the employee.
And that's the single rate.
Yes, yeah, that's the rate that they're getting while they're alive. And if they do a survivor benefit...
What would they approximately pay then?
Roughly $200. And that's just a ballpark. Every employer's different. Every survivor benefit plan is
just
different.
As an example of numbers,
About
right?
10%.
So you would go from, instead of making $2,000 a month, you would actually make $1,800 a month. So you're paying $200 a month.
Yes.
To then, if you pass away, leave $1,000 a month onto your spouse.
Correct.
After you pass away.
For the rest of their life. But, here's the part that people don't think of, because automatically you're like, yes, I need to protect my family, and that's great. And I agree with you 100%. The problem is, let's say that you are 60 years old and you start that, and now you're 80 years old. So 20 years down the line, if you're paying $200, $250 a month, it's like $50,000 that you're paying for a what if. And then most scenarios, if your spouse passes away, you don't get any of that money back. It's a what if. So you're paying that $200 a month if you pass away to leave on that 100. And if they pass away before you, you're not getting that back. The flip side to it, and just general math here, it's not going to be 100% accurate.
Oh, I'm doing the math over here. I'm working on the math.
Yeah.
I know you're going to tell me, oh, we can't do math, and I can't do it mentally.
Oh,
so
yeah?
I'm going to do it.
You're going to get your calculator out.
Yeah, calculators out, phones out, guys.
It's going to be about $50,000.
So I did the math.
Yeah.
All right. And these are just on hypothetical numbers, too. If they're paying $200 a month for that benefit, over the span of a year, that's $2,400. And this is actually simple math, so I probably could have did this on my own. But you multiply 2,400 times 10 years is $24,000 that they're spending
in 10 years
to possibly leave that money onto your spouse.
Correct.
How much would it cost for a life insurance policy? Would it be $24,000 or a lot less, I'm assuming?
So, it's going to be relative. And this comes into the whole when you should approach this type of scenario, because the younger you are when you set it up, the cheaper the price is going to be. And, if you wait until you're 60 years old and you've had, a heart attack and diabetes and you have all these health conditions, you might not even be eligible for the life insurance. So that's why it's important to meet with somebody when you're younger to talk about the survivor benefit, because life insurance, if who's selling you your life insurance isn't talking about the survivor benefit aspects of, retirement, that's not really the appropriate life insurance. So, just a rule of thumb, you're looking at maybe $100,000, $150,000 of permanent coverage for around that price. And that's if you're older. If you're younger and you do it in your 20s, dirt cheap. I don't want to say dirt cheap. I mean, there is a cost associated with it. But, for the long run, if your spouse passes away, this is the best part to it. You just retitle that to a child and the money stays in the household. So in the scenario I gave you a second ago where you're spending $50,000 in 20 years, you don't lose that $50,000 because you retitle that to a child and it stays in the household.
Yeah. So guys, there are a lot of ins and outs to life insurance. There are a lot of different life insurance policies. There are a lot of different companies. There are a lot of different products. And some of them might be a good fit, some of them might not. So that's really why we recommend sitting down with a financial advisor. I know this isn't in this show, but we were doing some research earlier. 62% of US adults think that their finances need tuning, but only 35% of Americans actually work with a financial advisor.
Yeah.
So those are huge numbers. There's a lot of people out there that want to DIY their own retirement, and it's simply not the best idea. It's not in your best interest to try to do it yourself. I always use the analogy of, this is actually another story, time for another story. So my mother, she tried to put up a fan in our house whenever we were growing up. Have you heard this story? Probably, I'm sure. After 20 years, you've heard them all.
I've heard them all.
Yeah, so my mother's tried to put up a ceiling fan in our house when we were growing up. She did the electrical all on her own. The weird part was that whenever you flipped the switch, the light wouldn't turn on. You had to use the thing up there to turn the light on, but when you flipped the switch, the electric would turn on and the thing would spin. Yeah. She also shocked herself while she was trying to do this. And it's just not something you could do yourself. An electrician is a specialized thing. Your heater or air conditioner break down, you aren't gonna call, a financial advisor. But you would call a financial advisor to talk about this stuff. And a lot of people think that they don't actually need a financial advisor because they just don't think they have enough money. They don't think it's, whatever the case is, people just don't reach out to financial advisors enough.
What I feel it is intimidation. A lot of people are intimidated by financial advisors because they're afraid to hear the bad news if there's bad news that's coming. And I try not to ever spin anything in a bad way, because even something bad, finding out about it, at least you can correct it and create it into a positive. So, that's the view that I have on it, because I've just seen a lot of people that are afraid to know the truth about what's going on in their scenario.
Well, honestly, whenever you meet with people too, we are a fiduciary, so you have to do the things that's in our client's best interest. And unfortunately, lying is not in our client's best interest. No. And I've heard you tell people on the phone, I can't blow smoke. Yeah. We can't lie to people, and we can tell people where the cards lie in their finances and their retirement. It's super easy for us to do that. And a lot of times, people actually end up feeling more comfortable that they met with us than they did before actually taking the time to meet with us. So. It's very important to actually sit down with a financial advisor and make a plan. We offer a complimentary written financial plan. You just have to call the number on the screen, 888-391-3465. I hope everyone has a great week this week. This is our 22nd episode. We'll be back next week to see you guys. Same time, same place. Have a great week, everyone, and we will see you soon.